I know you're making a fuckload of money. You're not sharing it with me, right? And I will punish you for that. If they're not willing to share with you, then they're probably going to try to fuck you in other ways too. The biggest mistakes I made were selling too early every single time. I sold like a bunch of Ethereum at like $30. I sold a bunch of Bitcoin at a couple hundred. These are the biggest mistakes I ever made.
Meet Akshat Vaidya, co-founder and managing partner of Maelstrom Funds, former head of corporate development and M&A at BitMEX. A seasoned investor navigating the complexities of digital asset, Akshat is the right hand of Arthur Hayes, where they decided to sell a large portion of their portfolio just before this market crash earlier this year. In this episode, Akshat explains why they are allocating in the market right now and what their thesis is with Maelstrom to generate a positive yield.
Now, if I were entering the space, I would sit down for 60 days and I would just look at all these on-chain data analytics tools before I even touch a single crypto asset. I just sit there and map out the industry. I'd be like, okay, where the fuck is money coming from? Who is spending it on what?
If you look 10 years ahead from now and you need to take one big bet, what's the one that you're going to be taking?
Ooh, one big bet for the next 10 years. Honestly, I think...
Well, welcome to the show, Akshat. It's a very interesting period of the markets. I mean, Ethereum is waking up in a way that we've not seen for a long time. So my first question to you is, what's the most interesting news you've seen in the past few weeks?
I think one of the most interesting dynamics that I've been not only observing, but also participating in has been the DAT stuff. All these digital asset treasury plays in the public markets. It's just so much stuff going on. It's fascinating.
What's your general opinion on all of these? Because for me, they feel like they are copycats of Michael Saylor's strategy.
Yeah, I'd say, I'd bucket them into probably like three camps. You've got the MSTR copycats, which are basically trying to replicate the exact same model. You got a great spokesperson. You've got, the natural uplift that happens when you just take a thing on chain and put it into TradFi public markets, et cetera, right? You got that playbook.
Mm-hmm.
Then you've got the low quality, shittier copies cats of that, which are like, they're trying to just do they're trying to put some horrible, like long tail, tiny illiquid asset on there. Or even worse, you see some with like NFTs on on DATs and things like that. You got the shitty ones. And then you've got the other category of DATs where there's some strategic link ups with the actual foundations themselves, right? So you've seen one, Athena just announced one last week. BNB just announced one this week. These ones I think are a lot more interesting because there's like preferential OTC discounts essentially for acquiring the token directly from the foundation. The foundation is incentivized. There's coordination between the two parties. So I think that's a lot more interesting.
Well, we're going to talk about these treasury companies for a little bit during the show because it intrigues me quite a lot. If you're talking to people that are not really into the Web3 space, they all want to buy treasury companies and get inflated stock prices or whatever that's happening. But if we talk about the markets, then usually the summer is really calm. Basically, if you go offline in June and you come back in September, nothing really happened. And then all of a sudden, the past few weeks, we see ETH go up from 2.1K to nearly 4K. What's your opinion on that sudden rise of Ethereum?
Yeah, I mean, to your point, right? It's quite atypical for this season to have this kind of action, but it also might subside. It seems like there was some other dynamics at play. For example, I don't want to connect everything back to these DATs, but that's a dynamic you've seen. Every single DAT that has been announced, if you look at the underlying token, there was a run up right before it gets announced in the underlying token. Kind of saw something very similar with Ethereum. And there's some other dynamics at play, right? There's like an Ethereum short-term supply shock that played out on some of the decentralized marketplaces as well. So I think that it's hard to say if that's going to be a sustained trend through the end of the year, but Arthur seems to think so. So I think we're going to be poised to take advantage of that if it happens.
Well, if we talk about Arthur, you're the co-founder of Maelstrom. How was working with him during the times?
It's been good, yeah. So first time I met Arthur was in my interview process to get the job at BitMEX back in 2019. And since then we kind of worked alongside each other at BitMEX, but not that much. There was a few rungs. I was just an analyst at that time. He was obviously the CEO. But that the distance started to decrease as I got promoted, and then he and I launched Maelstrom together about 2-ish years ago. And since that time, we've been working day in, day out, side by side. And I think I'll just say it's been an adventure. It's been a really good experience. But he is somebody who's very intellectually honest, brutally so. So it's impossible to kind of like get one by him, so to speak.
Well, he's got an opinion, but for sure. I mean, I've been listening to some stuff from him and reading the long blog post that he's writing, and it's very interesting to read all these things. But it would be even more interesting to be close to someone like him, to work alongside him in these markets that are crazy at times. Um, how did you make, or like, what did you make decide to go from BitMEX into Maelstrom back in the day, and to say, "Hey, I'm going to work even closer to R2"?
Well, if you look at the history of crypto, there was a time where basically crypto VC was CeFi investing, and that was before DeFi summer. So BitMEX Ventures was the part of BitMEX that I was working for from 2019 to 2022. And BitMEX Ventures, the mandate was take BitMEX's capital and invest it in projects, or back then they were actually called companies. They weren't called projects. Invest it in companies where there might be synergies with BitMEX, right? So it's like a brokerage, for example, that might be able to link new user flows with BitMEX, the exchange, things like that. And we made a lot of investments through that entity, and a number of them went on to become unicorns or near unicorns. We were the first check into like Rain Exchange and CoinDCX and FalconX. There's just a bunch of companies. Tab Trader. It was a very successful portfolio. But when 2022 came around, by then we had had 2 years of DeFi summer and beyond, right? And it was clear that look, the world is changing. Crypto VC is not just going to be investing in CeFi projects. You're going to have an understanding of and the ability to build out a portfolio in DeFi and the rest of the decentralized ecosystem if you want to survive and thrive in the next phase. So it made sense at that point to sunset BitMEX VC. There's no reason for BitMEX Ventures to really exist because tethering that to the exchange made sense when there were synergies with the CeFi companies and the exchange, but absent that, they didn't need to be together. So we decided, okay, let's untether Arthur's like investment vehicle from BitMEX, and then on top of that, we wanted to have an independent structure that could be more agile and chase after more interesting, innovative companies. So that's what we've done the last 2 years.
Well, talking about that, there's a venture book and there's a liquid book. Well, if we talk about the venture book, I think you primarily invest into tokens alone, right? Or also into equity.
Yeah, so like 98% of the time, it's where the venture book is investing into pre-sale rounds,
Hmm.
but there's a small percentage of time where we have invested in equity in companies as well.
All right. And when we talk about the liquid book, which is kind of just trading the assets that are on the open markets, what I've noticed, and probably everybody asks you, is that you've decided to get out of the markets at the latest stage of 2024, like early this year, just before the entire correction took place, which is the exact opposite of what everybody on social media was believing was going to happen, given we're supposed to get into the fourth year of the cycle, which is the big bull saga year. What drove you into the decision to sell everything going into 2025? What are the key principles or like signals that you were looking for?
Yeah, so you're right that we exited a bunch of positions at the end of December, early January. I think, it was driven by a couple of things. Number one, that just seemed like, it was kind of your standard Q4 experience. It tends to often be that way, especially this late in the cycle. Um, but more importantly, there seemed like there was a lot of hype around the new administration coming into DC. And Obviously, yes, a lot has changed. It's clear that it's been impactful, but it takes time, right? And so the hype that we were starting to see leading up to January 20th or whenever inauguration day is, it felt disproportionate to the actual changes that would be able to happen in quickly enough of a time to justify that. Um, and we've kind of seen that to become true. So at that time, Arthur and I, we took a trip to Mar-a-Lago for other reasons, and we met some folks in the administration and around the administration, and it was clear that obviously crypto is not their highest priority. Obviously, that shouldn't be a surprise to anyone. So that kind of further solidified our perspective that, look, yeah, we'll probably get policies and rules in place that we like, but it's going to take some time. And then for that to then percolate into actual innovation that reflects that, and then that innovation to mature, that we're talking about a whole cycle. So the benefits of the Trump administration likely will be really felt next cycle, but we'll see. We're getting a little bit of it now.
Yeah, you're touching upon that. I mean, I think during that period, people were expecting the Bitcoin strategic reserve to be confirmed within like a week, standard crypto
Right.
stuff. Uh,
Right, exactly.
and then there was a cold shower where they said, "Whoa, okay, this is going to take some time." But in the recent like weeks or months, we see the Genius Bill coming in. We see the Clarity Act coming in. A lot of listings and IPOs on exchanges with blockchain native companies. How do you see the impact of like the two bills that are being approved into the space right now?
Yeah, I mean, clarity, we'll see how it plays out, but at least there'll be, at least a major departure from the insane reality that was enforcement through, I guess, regulation through enforcement right before, where it's like, give it a shot and we'll see if we sue you or not, right? It's like that's how our industry was regulated. You ask the government a question, hey, am I allowed to do this? They'll say, I don't know, try it, and we'll send you to jail if we don't like it later. Just insane. So at least there'll be a departure from that, hopefully. I think there will be a sustained departure from that, as far as the Clarity Act, but we'll see. There's still more to be seen on that front. It's still underway. On the Genius Act side of things, very bullish, obviously, for the existing incumbent models, right? For Circle, et cetera. We'll see how it impacts the newer business models, like, the Athenas of the world. I think it'll be net positive. And then obviously a lot of the value flows will hit certain L1s that are kind of inherently preferred in that. So it's good to see at least we have some foothold. We'll probably have to evolve and adapt these regulations as time goes on, but it's an amazing starting point.
I think it is. I mean, maybe it's correlated to the recent surge of Ethereum, where most of the stablecoin activity is taking place on Ether. Um, I mean, we've also seen some big Web2 companies coming in, like Robinhood, saying, "Hey, we are building tokenized stocks on Arbitrum." Is that is that going to continue to have a big wave in the upcoming years where these type of news items are going to take place? Like, is that the new use case that we were looking for in the market?
Yeah, I mean, if you people would always ask me, right, in the last couple of years, my friends who are not in crypto, what is crypto actually used for? Like, does it have product market fit anywhere? And my answer was always the same, right? It was, yeah, we've got Bitcoin, right? The meme coin that everyone's decided has value, a store of value, just like the meme rock, gold. So fine. Um, and then we have stablecoins. Those are the two primary initial use cases that actually had product market fit, was used outside of crypto, used by non-crypto folks, was not speculative in nature. The tech function has never really been major issues with prevailing business models in that space. And I think now that that legitimacy is enshrined in something like the Genius Bill, or the Genius Act rather, we can now safely basically market this stuff to new kinds of audiences. So that's new kinds of builders and founders, right? Because now you've got all this talent and SF being like, whoa, I totally was sleeping on this for like 10 years. Now let me look at what is this stablecoin stuff. And there's some smart brains there. They'll think of cool business models that we in our little incestuous industry didn't think of. So that's great. We'll have new kinds of builders enticed into this space. We'll have new kinds of investors, larger pools of capital, the more sophisticated investors, TradFi money, et cetera, coming into the space to invest in that ecosystem. And then new kinds of users, kind of all this like beautiful flywheel. you guys are users using the better products that hopefully get unrolled or get rolled out in this process, and also um, integrations with existing business models. Like Wells Fargo, for example, integrates with stablecoins, and you'll have new users who aren't even aware that they're using stablecoins in the back end of their usual normal course of business with these companies. So I'm very bullish.
I mean, ultimately, I discussed this in one of my previous shows with the head of product of Optimism. I think ultimately what we are trying to achieve within the Web3 space is to create a product that people are going to be using without knowing that they use blockchain. It's kind of similar to like right now we are doing this podcast online, which means we're using an HTTP website. I have zero clue how this works, but as long as it works, it's fine. Is that like the first case with stablecoins that are people are likely going to be using blockchain without even knowing that they are using it?
I think, yeah, that's the eventual end goal. And it will, it already, in some parts of crypto, it kind of feels a little bit like that. It's getting there, let's say. But yeah, we're not there yet. The user interfaces and experience is still way too complicated for, I'm here visiting my parents in my hometown of Austin. And until they can easily use these products without having to ask me any questions, we've got a long way to go.
Well, how is explaining crypto to them?
Yeah, it's still very convoluted, right? It's exactly what you said. If you try to explain, imagine explaining what email is to a bunch of people who are used to fax machines in 1991, and you're like, yeah, so you like there's two types of back end processes that are happening. There's some like code that does this and that. It's just very complicated. And
Hmm.
the end user's like, well, I'm just gonna keep using fax because all I do is just like type five things and it sends and it works.
Hmm.
So I think we're still there. It's we got a long way to go.
I watched the documentary BlackBerry the past weekend, which is fascinating to watch, where BlackBerry was on top of the league, and then Apple came around, and all the people at BlackBerry didn't realize or understand why a full screen was actually better than having the keyboard. It's I would definitely say if you haven't watched it, watch that one. It's quite similar to all these things that are happening. If you're staying in your echo chamber, then it might be hard to see what the people actually need and to see which product is actually a product market fit. However, I would like to talk about Maelstrom because, as I said before we went live, you've got a liquid book and a venture book. We do the exact same. We have a venture capital and we have a liquid fund. Why do you have these two books and why is it relevant to have those?
Yeah, so we started off as a VC book when we launched in Q1 2023. Then in the second half of last year, we decided to spin up a liquid arm as well. And the idea there was if we were to keep these siloed, then to some extent we will unleash, kind of the best skills of each type of team. Venture investors look at very different things than hedge fund investors. And we wanted to make sure we're attracting talent that can bring both skill sets to the table. But ultimately, these two groups do need to interface with each other, right? Because we're in this crazy industry where venture kind of, it's like liquid investing is sort of a venture strategy and vice versa. Um, and there hasn't really been a financial landscape that ever looked like this before. So I think eventually every VC fund in crypto has to become also a hedge fund and vice versa. So that's kind of like while these are two different buckets within our investing strategies, we do interface with each other quite a bit. And we've also started onboarding a third strategy, which we're in the process of rolling out, which is a buyout strategy, which is separate, but there are still some synergies with the other two.
And if we talk about the venture book, I mean, there's a constant debate happening on whether investing into pre-TGE projects still makes sense. Like in the Netherlands, there are multiple venture capital companies inversing and becoming liquid. So they decide to take, let's say, smaller market cap projects and buy them on the open market or through an OTC because they think that's more interesting. Are there still opportunities for VCs in the pre-TGE markets that you're seeing right now, or how is the market changing?
Yeah, I mean, it is cyclical ultimately, right? So when you're deep, when something is just broken, FTX is gone, everyone's scared, crypto's a bad word, everyone thinks you're either a criminal or bankrupt if you're in crypto. That's the perfect time to start investing in the pre-TGE rounds, right? I mean, maybe not that week, but like in the next couple of months, because a lot of the best founders are minted then. They're the ones who've been sitting there waiting to build something that's actually innovative, that actually moves the needle. It's not just a copycat of what you've seen, not like, Dex number 685. Um, there's also there's dried up liquidity, so you're usually able to get better terms, and usually can get better valuations as an entry point. And then, the unlock periods, which are like 3, 4 years, the math makes a lot more sense when you do it that early because they'll start to unlock when the bull market happens. So I think that that makes sense to then focus a little bit more on the venture strategy. But as far as like this transition to liquid, that tends to VC funds tend to do a little bit more of that as the cycle starts to pick up and we start to enter more bull dynamics because nobody wants to be left in a 4-year lockup holding the bag when they enter it at the top. When you, let's say you do like a, 1 billion FTV token 2-year unlock at the top of the market, well, you're probably going to start unlocking when it's like 300 million at the next um, bear. So I think it makes sense that a lot of funds have transitioned that way, but I think there'll also be a reversion back a bit when there's a bear market again.
Why are so many? I know that you've been saying it in a different show as well, but why are there so many VCs that are basically following the price of Bitcoin? I mean, if you use the data, the amount of money that's going to be allocated into projects is going up substantially when Bitcoin breaks the all-time high, which is for me as also running a VC, it's not really understandable why you would be doing that. As a matter of fact, you would actually like to take risk off the table when markets are going up like that. But why is it still
Yeah.
happening?
Yeah, I mean, I think there's probably two things at play. One is just like our psychology. We're a young industry. We're all average age is like, under 40, whatever, probably younger. And we haven't been through enough cycles to see. You talk to like a 78-year-old investor in any industry, they'll be like, they know, okay, I've seen 7 cycles in my industry. I know exactly what to do and what not to do. A lot of us were in like cycle 1 through 4. And it just feels like, well, the number's going to keep going up until it doesn't. And there's always this like fear of missing out because ultimately, if when I look at my own portfolio, the biggest mistakes I made were selling too early every single time. I sold Ethereum. I sold like a bunch of Ethereum at like $30. I sold a bunch of Bitcoin at a couple hundred. These are the biggest mistakes I ever made. So I'm like, well, I'm never gonna sell too early, right? That's like it's been burned into my mind, and that can create some endless FOMO and also not realizing, okay, well, there are risks that are accumulating, and it sometimes makes sense to take some chips off the table at the top, even if you think it'll go a little bit higher, knowing that eventually we're cyclical, it will come back down at some point. So I think that's probably the biggest thing at play. But then you've also got the fact that, well, crypto trades a little bit differently. It is kind of like a momentum stock in some ways, right? Where often when things are surging, there's room for it to surge a bit more. So you kind of have to balance these two dynamics at play. But ultimately, I try to take a more disciplined approach when I'm managing other people's money, right? So I'm managing Arthur's capital here. I take a more disciplined approach than I do with my own money. With my own money, I'll ape into dumb stuff. I'll like see something rise 100%. I'll be like, okay, it's gonna go 100% more. With his capital, I'm a little bit more like, all right, like we need to take some risk on strategies because it doesn't scale beyond a certain number.
How do you? I know that you've been saying this, but until when are you deciding to deploy capital through the venture? I checked the data, but I think you still are doing some VC deals at this
Mhm.
point. Are you
Yeah.
going to stop doing those, or are you going to focus more on liquids? How is that balance going through the cycle?
Yeah, so we went from basically doing 100% VC stuff to now like let's say like 40, 60.
Mm-hmm.
And the number of deals we've done has gone down for sure. There still are opportunities in this market at this time, but it's absolutely less than 2 years ago or a year and a half ago. And we tend to see it as, like the venture book is really meant to be something that we accumulate when the world is afraid. And the liquid book is meant to take advantage of little arbs and little opportunities here and there in times of volatility. So I think that's how we've tried to structure it, and we're probably going to see how that goes for another cycle or two.
Well, the prime question, I think, in this case is, are we still going to see or how do you see it, a standard 4-year cycle? Or is everything just going into a more of a liquidity and macroeconomic cycle instead of the standard 4-year degen cycle that we all know?
Yeah, that's a really tough one, right? Because it's tempting for me to say no, we've broken it because there's new TradFi money. It's a completely different ball game. But at the same time, I've been in this space. I've been investing in crypto since 2013, and I have never seen that cycle break. Now, whether it's exactly 4 years or not, okay, that's like a little bit bro science, right? A little bit of male astrology here, or crypto bro astrology. But at the same time, um, I think there's something to it. There seems to be a certain pattern that plays out, and I don't think personally that just because there's new types of money entering the space, it's going to dramatically change. I'm expecting something to break in the next year, and that's when we'll go ham and start ratcheting up all of our investing activity again.
Oh, so you mean perhaps a longer cycle in that case, or?
Yeah, I mean, I'm not overly wedded to like it's going to be, exactly the same, Q4 or Q1 of the same 4 years
Hmm.
every single time. But I think eventually stuff breaks in our industry, right? We accumulate risks. There's something we're not paying attention to. There's a bunch of interlinkages, and then we all miss it, and then it breaks, and then the world falls apart, and then we start over again. And I think there's no reason why it shouldn't happen again. And it's the more that people are aping into tokens, the more likely it's happening because we're all collectively we're more focused on I don't want to miss a deal. Yeah, I'm sure you've remembered times in the market in the past where it's like I can't sleep for 8 hours. If I sleep for 8 hours, I miss something.
Hmm.
I miss like a three bagger. And we're getting kind of close to that. It's like kind of teetering there. And that's when none of us are paying attention to the risks. At that stage, we're just all in execution mode. And then that's when something usually breaks.
Well, I know from past history that if you stay in your positions, then you're going to lose a lot in the bear market. So I'm going to be over focused on risk, I assume, in the coming period. Um, Going back in time, back in the previous bear market, I think you have been deploying a lot into all the projects on the venture book. What were the things during that period that you were looking for?
Yeah, so I mean, we at that time we were pretty new, so we didn't have a team. We have a team of seven. Back then it was just me and Arthur, and we were kind of just like taking one little subsector at a time. So we started off with staking. That was, I'm sure you remember, that was the narrative of
Hmm.
2022, 23, was staking is going to change the world, and it kind of did in some ways. Now, some aspects of it didn't live up to the promise that it could have, but there was definitely some innovation there, and I think that's kind of how we took it, right? We just took one um, little sector of innovation at a time, and we were looking for mostly founder quality. So the first filter was, is this in a category that could make money? Second filter is founder quality, and third filter is, does this team have the capabilities beyond the founder to actually take advantage of that opportunity? So there's like TAM, founder, team. Um, we're not like super focused on it needs to be an extremely technically innovative concept. Um, that's like fine if it is, but what we care more about is our users going to actually be enticed to use the product. We care more about go to market personally as a fund just because of our background than we do about really fine new technical aspects to what they're building.
How do you, well, during that period, I mean, there's been a lot of debate taking place on coins that have gone live. I think 2024, when it comes to VC tokens, on a way higher valuation than they actually should be. and now it's more important for projects to be making a revenue. How do you like start valuing a certain project at an X valuation?
Yeah. So I guess, once it, like you said, once the project starts making money, it's a lot easier to value
Hmm.
the token. And we're starting to see that with certain projects, some in our portfolio that have started to really understand that, look, okay, we've got like security like instruments that now the industry is trying to run DCFs on and trying to understand, well, if revenue is this, profitability is this, there's a buyback mechanism that looks like this, the token value accrual mechanism works like this. They're kind of just like doing the math and recreating what we did in traditional finance, before I was in crypto, I was in private equity, what we've been doing for 40, 50 years. We're now recreating that with a new stack that's basically the token stack. So you've got the token stack as well as the equity stack, and obviously debt. And now you got three different. Before you had like a three statement model. Now you probably have like a three statement times two, like a grid type of model that's going to come about. And I think that's one of the coolest dynamics you're seeing now in crypto is projects are starting to realize, okay, investors are looking at our tokens that way. So now let's start doing things like investor calls and start shoring up the storytelling from a fundamental standpoint. So EtherFi is a great example where they're doing these investor calls now, and they're talking about the token from a fundamental standpoint, so people can actually come in and run valuations and understand, all right, what should this token actually be trading at?
It's actually also the reason why some of those projects are actually continuing to go up. I mean, prime examples are Aave, Hyperliquid, any other DeFi protocol where you can run the numbers. They tend to gradually continue to go up based on the fact that they continue to grow, while the ones that continue to fall have zero revenue and are out of interest. Um, do you think that that is going to continue to happen where all those projects are just continuing to fall until the numbers add up?
I think yes. And that's what's most exciting about crypto is that in the past, there would be regulators to enforce that kind of thing.
Hmm.
But what's amazing is that we're collectively building this like internal collective tribal awareness that, wait a minute, there needs to be revenue and a functioning value accrual mechanism to the token for me to justify myself buying the token. And that is being created through market dynamics entirely, which is beautiful. And exactly what you're saying is going to happen, that eventually anything that isn't explicitly a meme coin, like, hey, this is for fun, let's gamble with this, and isn't actually generating revenue or has a path to generating revenue, all that stuff in the middle is going to go to zero over time, as it should.
Well, hopefully, if we get another sort of cleansing in the markets where all the worst projects are going to get out of the space. What were the verticals back in the day that you were looking for? I see that there's a lot of DeFi in the portfolio. There's also a lot of
Yeah,
infra. Were those the two that you were looking for? Or?
that's exactly right. Yeah. So at that time, we were looking mostly for, there's a few categories we were excited about. You mentioned staking, restaking, that was the
Hmm.
whole thing. There was infra, kind of somewhat broadly defined, because we kind of took this belief that there's like an app chain thesis that could be playing out at the time and didn't really pan out the way we expected, but some of those projects have done well and are still building. And then DeFi was the biggest category we deployed pretty heavily in, and obviously the market is pretty aware of our largest and earliest bet as a fund, which was Athena, the stablecoin that kind of also touched the staking space a little bit.
Hmm. And I think I've noticed that you were also investing into RWA-ish with all those stable coins and Deepin,
Mhm.
which is
Yeah.
interesting because Deepin hasn't really provided anything as of yet, except for the fact if you were an airdrop farmer, then congratulations.
Mhm.
Um,
Right. Right.
outside of
Yeah.
that, we haven't seen any sort of real hype or adoption taking place in that particular vertical. Why did you
Mhm.
decide to go into Deepin and what's missing?
Yeah, so we've done 2 to 3 deep in deals, and I think that those what we've seen is they tend to go better when there's like an anchor client, right? An anchor tenant in a way, that's basically going to absorb a lot of that supply because it's not that hard to crypto solves the coordination problem. You can coordinate supply, but to actually have captive demand, that's a little bit harder. And that's where we've seen it go well. There was one project we backed that had a major anchor client to absorb a lot of the demand, and ended up being one of the best deals in the cycle. Right? It was ATH, and I think that's an exception, right? Because a lot of DeepIn just kind of coordinates supply, and then they're like, all right, anyone want this stuff? It's not that cost effective, but there is supply. We've got the long tail supply together, and it kind of just fades. So they've got to solve that issue. DeepIn needs to solve the captive demand issue. It also needs to solve the value accrual mechanism issue. The token doesn't really reflect um, progress in revenues yet for most of these projects. So I think there's two things that DeepIn needs to fix. But I'm still conceptually very, very interested in DeepIn. I think DeepIn in 10 years will be larger than all of DeFi today, and it will be the biggest category. I hope that that's where your vision of people in the world will be using crypto without knowing they're using crypto. I think that's where majority of that will be happening eventually in 20 years. But yeah, we've got a long way to go. It sucks now.
I mean, if we have seen so many deep in projects coming around, and they are great, they are fun to watch and see, and um, with all those tools and stuff, it's amazing. But then you start questioning like, who's going to buy this token? And there's no real company because there's no real market. And
Yeah.
it's kind of like, whether you, is there going to be a market for this? That's kind of the question that you should be asking overall for any deep in related project. Perhaps at some point there's going to be one that's going to solve a big world's issue, and then uh, all of a sudden deep in starts to go big again. For instance, in the energy markets or whatever they do. Um, how do you see deep in over the coming cycle, as it was categorized as one of the big anchors that is going to achieve mass adoption like DeFi has been getting?
Yeah, I'm very optimistic conceptually. That being said, I haven't actually seen anything exciting yet. Like you said, tangibly on the ground, has anything actually been built that's working? There's like a couple. I think Multicoin has backed like one or two that are kind of okay. There's they've overstated their own traction, and they've got loud cheerleaders, but they're not actually being used that much. But at least they're kind of sort of like case studies of what you can build. And I think like Pipe, right? Pipe Network is an example of something that's like, okay, it's probably working. It's early and we don't really know from the outside, but at least they're telling us it kind of is. So there's some exceptional examples here and there. And I mentioned, ATH as well as an example. But as far as, like you said, to actually solve a real serious world problem at scale, get mass adoption, we are a bit of away from that, but I really think this next cycle in the bear, in the next, so if you expect the bear to come in like 26, 27, I think during that period we'll get an influx of a lot of new kinds of builders, and I think they're gonna look at it and be like, well, okay, DeFi is maybe tapped out, and there's already some expertise there, and it's kind of doing its own thing, but deep in, well, there's so many ideas, and I think something will come about of it in that phase. It's like, oh, we'll be there to invest in it.
I mean, if we talk about projects and founders, what are the three key things that you're looking at in a founder that triggers you to actually get to the next phase of the due diligence or the research?
Yeah, so as far as, I mentioned to you like TAM is one of the most important
Hmm.
things, right? Because if you're really great at something, but it's a tiny industry, it's kind of pointless. So TAM is the first filter. Then the second filter, right, I mentioned to you is founder. And I think as far as founder traits that we look for, one of the most important things is definitely humility. The most humble founders tend to be the ones who will hire really well because they know that I should not be the smartest person in this room. I should just be the coordinator and orchestrator. There should be someone much better than me at UX in the UX team. There should be someone much better than me at back end coding shit than me. Like, they should just be assembling a team that requires humility and the ability to constantly learn and pivot business models when they don't quite work out the way they expect. Then integrity is huge. I think in both in crypto and in just early stage investing in general, there are not a lot of guardrails, and founders can really waste investor capital and time and and really not deliver on anything that they've raised the capital to do. And we've seen that a few times. Um, Been a couple cases in our portfolio, but mostly we've been hopefully, uh, we'll see how it plays out in the next couple of years. But so far, we've been very careful to screen for founders on that dimension. Um, I think lastly, then you just look for like general empathy and competence in interacting with human beings, because that's ultimately what's going to drive. How did Athena become one of the fastest growing TVLs in the world? It wasn't going to happen with just like throwing, hey, here's our tech, take a look, right? You had to be able to sell to whales, and our industry still is, especially DeFi, is highly dependent on whales. So if you can't manage whales, then you're not going to be able to really build anything.
I agree on that regard. I mean, the Tina team, but also the Aave and Chainlink teams are very out there, and the founders are very approachable, um, very intelligent, and are very easygoing when you meet them during conferences or whatever. Um, just normal human beings, while the ones that actually suck are usually the ones where there's a very arrogant founder name dropping a lot of stuff, not making sense. If we talk about all those founding teams and then the Maelstrom is investing into them, how do you stay in touch with the project? Like, what are you doing to make them a success or try to have a higher chance of success?
Yeah, so Arthur is a founder himself. Is in 2014, 2015 timeframe, he was running around with a pitch deck saying, "Hey, I want to raise capital for a derivatives exchange focused on magic internet money." And obviously, everyone laughed about the room. They're like, "Wow, this is why." Okay, interesting idea. Sounds like a huge waste of time. Wasn't able to raise the money, and ultimately, he got like one tiny investment from one investor, Asia-based investor at the time. Wrote a tiny microcheck, but they had to bootstrap it, and then they took it from there to becoming a profitable unicorn within a couple of years, and were responsible at that. I think at their peak, BitMEX was like 90% of global dollars notional traded in this industry. Um, it bootstrapped that entire thing, and because of that experience, again, right, he knows exactly what founders are going through, and now it's a lot easier, right? You don't have to bootstrap everything from scratch. You don't have to get laughed out the room. People actually take you seriously. There's real VCs focused on the space. It's a completely different world. It's much easier to build now than it was before. Um, but because of his boot camp training, having to build it that way, he's able to be very helpful to founders on like, advisory calls or just like people sit down with him for 30 minutes and you see founders, see like light bulbs going off, and they're just learning so much from what he did correctly and what he did incorrectly. And he's very candid about explaining to them both. So I think that's the biggest area that founders find enticing to taking a check from us. And then just more generally speaking, we're plugged in. We tend to be in the know, and we're able to connect a lot of dots. So in the days when Athena was getting started, Arthur was connecting them with sexes to negotiate some of the sex stuff. He was connecting them with whales to help amass TVL, and we still to this day remain very plugged in. So we're able to help porcos in very lightweight, efficient ways like that.
I think more VCs should be doing this, to be honest.
Mhm.
I mean, not every VC is as aligned with the project as probably you guys are,
Mhm.
which I think it's as a founder, it's still super hard to launch any working product or token in this space. I mean, building a great product is possible, but building a great product with a working token with proven tokenomics is a whole different world. Uh,
Yeah.
and that's where the difficulties come in. Talking about a token, why do we see so many founders wait for the token to go live to achieve the perfect market conditions?
Yeah. I mean, I think, yeah. So there's some things I've noticed in this cycle about tokens, and I think you're pointing out some of them that, yes. Um, Trying to, if you think your product doesn't really work that well, then you're going to sit there and obsess over, okay, when do I maximize, the timing of when to launch a token, et cetera. Because ultimately, then you just think your token is your product. And It really shouldn't be that way. Your token should not be your product unless you are overtly saying, I am a meme coin, I am for jokes, I am an open Ponzi, we're gonna have fun with this, and then there'll be a winner and there'll be a loser. I think unless you're openly stating that, your token should not be your product. And if your token's not your product, then you shouldn't be sitting there obsessing over, when I should launch this thing. I think that if you look at the kind of like fair launch model of, you know, a very low FTV here, it's in the open market, it's linked to our profitability, and as long as the company is doing well, the token will go up. I don't really care about managing unlocks and like trying to game the tokenomics system, which you said basically Hyperliquid, right, is a great example of this, where there's like, all right, tokens here, it's linked to revenues in this way. We're focused on making sure people use the revenues, use the company as products so that revenues grow. That'll have a knock-on effect to the token. If token goes up, it goes up. If it doesn't, that's just a reflection that we're not doing our job on the product front. That's how every project should eventually feel, and I think we're moving that direction.
It's fascinating because it's not really complex what Hyperliquid has designed in terms of. I think we've seen it in the past like 5 years many times already, and then there are so many founders that overcomplicate building tokenomics for themselves, while a simple idea is actually how it works. And like I think the best projects have been going live in times that it's actually not great. What would be the advice that you would give to like your portfolio companies when it comes to going live in terms of their token?
Well, I would say genuinely, just don't overthink the token, right? The token is a byproduct of you building a great product and appealing to clients and getting money from them, and then doing so profitably. So if you focus on making products that people actually want to use, charging them the right price for it, paying less than you charged, i.e., making profit, then and your token basically is just some kind of like buyback, you got a fee switch that's on, then just launch your token at like 20, 40 million FTV. Don't do any, unlock everything on day one. Don't do any insider rounds and just, let the thing go up. I don't understand why in this day and age there's still projects that are like, oh, I got to pay, 9% to Binance, and then we're going to launch at a billion FTV, and we're going to do all this marketing, pay these KOLs, and do all this stuff. It's like, this is the kind of thing I would want to short. This is not a project that is actually focused on what it's stated in its investor presentations. Um, that's all I'm really tell them. Just keep it real simple. Launch at a low FTV. Don't play these games. Let the thing go up.
There's also a thing that I see happening recently, which is back in the day, projects were doing multiple rounds before TGE, and then it's kind of done. Right now, what we see is that projects are raising, then they build a product, they go live at a lower valuation, as you described, and then there are Series A, Series B, and Series C taking place on the token after TGE. What's the direction when it comes to that? Like, are we going to see more projects that are going to go live at a lower valuation out of the bad stuff that we've seen where projects are indeed going live at a billion or more?
I think eventually, yeah, we're in a world where VC actually gets hard because right now, in the past like 5 years in crypto, it's been more about access, right? So like, you don't need to be a great uh, due diligence operation. You don't need to have great awareness of what you're investing in. As long as you know you're getting in one of the first two rounds, then you know there's going to be like three more. And then you know the sex is going to show to retail at 20x what you invested at. It might crash like, half, 80%, but at least you're up like at minimum 5 to 10x, right? It used to just be about access. And then your focus was basically like not running diligence. It was, okay, how do I network with the right investors to get access? And that was a very unhealthy game, and it screwed over basically everyone. It screwed over LPs, screwed over retail. It didn't even really help the founders that much in the long run. It really benefited sexes the most and fund managers. And you're starting to see that unwind because I think everybody's getting smart to that. And I think you will see a much simpler setup in the future where VCs actually have to now go through and understand, okay, look, everything is going to be listing at 40 million FTV. Everything is fully unlocked. Now I have to actually do diligence and figure out which one is good to invest in. It's not just about access, it's not just about who I know. There'll be some of that, but I think over time we'll transition towards a pretty democratized version of VC where any random dude sitting in his basement in Brussels or whatever, or Moscow, can be just as good of a VC investor on a percentage basis, at least, as anyone sitting in a VC tower in New York.
If that is the case, I think the biggest anger that a lot of retail investors have is that they don't get all this type of information. Like you and I and your team and our team are in the markets where we spot the projects pre-TGE, might have a multiple when the project goes live at TGE. Most VCs are actually hedging their positions, so then the token goes down due to the sell pressure of the shorts, which then basically harms every retail investor. What would
Yeah.
your advice be to any retail investor that is looking to get into tokens but doesn't know all this type of info?
Yeah, I mean, at this stage, right, to your point, that we're still in a world where, um, I guess just to flesh out a bit what I envision in like 10 years is that eventually VC rounds are here's a public presentation available to the entire world. Here's what we're building. We're launching at 20 million FTV. Bid it up if you think it's worth it, right? Some version of that. That's ideal. Right now, we're still in a world of like, all right, like who's got Allo? Who do we need to network with? Who's going to share with us the deck? Okay, now we got to beg for Allo. We're the ones who get in early. Yeah, it's kind of like the traditional VC game just applied to crypto. And if we're still in that world, so given that, I'd say retail has basically no choice but to be beholden to that and start to honestly like you have to study the VCs, right? Who's got a great track record? Who tends to not just immediately insta dump? Who tends to back projects that are strong and can get allocations early in stuff that are promising? I think that's like one way to triangulate that information. The other thing to look at is, some of these metrics you still can assess for yourself from the outside world. You can still figure out TAM, like anyone can estimate that. You can assess the project's white papers and documentation to understand the mechanics, how it works. You can kind of look from the outside to see who their partnerships are with, to see if there's like a likelihood that these guys will be successful. You can read about the founders sometimes, um, not always. And yeah, I mean that's pretty basically the best you can do. And then you just have to just kind of use your sixth sense to figure out if you see red flags anywhere. But it's tough as retail. I genuinely, I don't think I try to compete against the insider cabal at this stage of how the industry looks.
That's actually true, but I think you mentioned it in another podcast where you said, well, the best thing you could do when you build a project is to have the community make money with you. Which I think in some way I agree, but if you have a very technical DeFi project, you rather want to have wheels on there generating revenue and then share it with the token holders, etc. So how can people like become part of a project and become the insider community that can benefit from it? Like for instance, with the best example is maybe Hyperliquid, maybe Kaito, which is also has shown some interest in the sense of building a community. What's your advice on that regard?
Yeah, I would say, right, it's exactly what you said, that you got to screen for companies, projects, etc., that are interested in you making money, right? If they're willing to share, we're entering a world where retail knows, I know you're making a fuckload of money. You're not sharing it with me, right? And I will punish you for that. That's like kind of the direction we're moving. So whether it's like these like one-off extraction minded events like what we saw with Pump.Fun, right? With that ICOs, like, I mean, we didn't touch it through our Maelstrom vehicle because we could feel that there was an extraction mindset. There's some shady things going on with the terms of the deal. Um, and I think most people are aware by now what exactly that was. So we're just like, yeah, no, this is not going to go well because now retail is caught onto that. See the same thing with the sex launches, right? Retail, if you look at like Binance listings in the last year or so, retail's caught on that you're not interested in making us rich with you. You're just trying to do this like PvP thing, and um, we're not going to participate. And so I'd say the same thing with like early stage communities. When you see a project, look how much they're willing to share with you. If they're not willing to share with you, then they're probably going to try and fuck you in other ways too.
Well, it's not only retail, it's also, I mean, I used to be a KOL, I think I still am. But KOLs are getting screwed over massively because they are used for the reach to just be dumped up on. Um, that's
Yeah.
also why I try to transition to be the liquid fund and the VC because it's not really fun. But once I leveled up to becoming a VC, I saw that everybody tries to screw everyone over and to just get allocations. And I'm not really a beggar. I'm not going to beg you to get like an intro to a project. That feels weird. But hey, it's the game. If we talk about communities, what about meme coins?
I like meme coins. They're fun. I think it's just like it's gambling, right? It's overtly it's like gambling meets Pokemon cards. There's some culture aspect to it,
Hmm.
and I like how honest they are when they're honest, right? When they overtly just say we're doing a pop-up Ponzi, and there will be winners, there will be losers. I've created this token. I will likely be a winner, but if you catch it early enough, you can be a winner too. But there will be losers, and I think it's just like fair when you just say that we're having fun, and it's just like a little pop-up gambling operation. I
That's
enjoy
true.
that.
Um,
Uh, but when they try to claim they're doing more than that, then I'm like, that's not really nice.
are they going to be around for the coming cycles?
I think very sparingly. I don't think they'll be in the same I think you'll see the same thing that what happened with NFTs, right? There was a time where there was just so many, just a proliferation. I think there'll be a flight to quality, like there was a flight to quality with NFTs. There still are NFT projects. The CryptoPunks. There's some projects that are still doing quite well, but there's a fraction of what they were before in terms of like just volume. And I think the same thing's gonna happen with meme coins. They'll be just a fraction of what they were before.
Probably there's going to be a new transition with a slight tweak when there's a new sort of hype being created surrounding one particular meme coin, and then there will be 1,000 copycats doing the exact same, just like hype every time goes. Um,
Yeah.
when we look for the next, like, let's say 1 year where we are supposedly going to get into an altcoin fiesta, which everybody expects.
Yeah.
Um, what are you most excited about, or what are you expecting?
Yeah, I mean, I think there hasn't been a re-rating yet of the high quality DeFi projects,
Hmm.
right? You just look at like um, you've had Bitcoin dominance is still relatively high. You've had some cycling into ETH a bit, but that hasn't yet percolated into the high quality DeFi projects. So we kind of have like a little micro downturn today, right? US trading hours. I'm expecting there to be a little bit more pain, and then we'll be accumulating some of those blue chip names soon once we get to a certain point, and hopefully ride that into what at least resembles like past altcoin seasons. But we'll see.
Yeah, everybody's looking for the altcoin season, and for people that are listening, and today it's the end of July. So maybe if there is a gap between the release and the shoot, we probably would have seen a correction on the markets anyways, because after a surge of nearly 70% for ETH, it's a little overdue to have a correction taking place. Um, in that sense, you mentioned that well, macro is changing a little. What do you expect in the coming year on macro? As in, it's very everybody seems tempted for lower rates and more printing to come, and then all the cryptos are going to go up. What is your
Yeah.
expectation?
So, I mean, yeah, inevitably, eventually, in the long run, there's only one option for the central bankers and the system that we've created, right? So we kind of know what's going to happen eventually. Um, Money printing, money supply increases, like that's just inevitable. But I think in the shorter run, how it's going to play out, it's really hard to say. We're in a very uncertain phase. You've got these like you had the tariff induced panic, right? And it's clear now that that was a little bit more of a bargaining chip than I think we realize, right? These tariffs keeps getting postponed with China, and now you've got these deals coming together with the EU and some others, and it's I think that's a positive sign. Uh, I think as far as whether rate cuts are going to come this year and to what extent, very hard to say. There's a lot of inputs into that. Um, but I think cautiously, we're optimistic that in the next 12 months, ultimately there'll be money printing in various forms. So we think that'll be reflected in crypto asset prices.
Well, I hope it will. Um, when we talk about crypto investments, and you've done a lot of those personally, and also in the company or in the family office. What is the one in the recent years that you think and you look back and you're saying, "Shit, I got that one wrong."
Um, well, I mean, to be honest, if you look strictly from a monetary standpoint, um, it's like VCs are usually more upset at the deals that they didn't get than they are the ones that died, right? Like you can have one winner that you missed could make up for like 100 losers.
Mhm.
Because if you're investing a pretty small check and there's 100 extra, that's already worth 100, right? Other deals that could have just died. So I think we've been probably a little bit too conservative, right? We've like had hit most of the big winners of this cycle. Um, and there's definitely some that we missed. And I think one example, again, strictly from a monetary standpoint, but I think in the long run, from a reputational standpoint, it was the right call. But we missed Pump.Fun. I met the founder in 2022, and we had the opportunity to invest, and it just didn't seem like the right fit for a few reasons, and ended up being for a while we were kicking ourselves like okay, that's yep. Now we would have made money, but I think on the balance of like reputational aspects, balance against money, I think probably is the right call. But yeah, that was definitely one that was like, all right, I didn't do my shareholders well by missing that one.
Well, I mean, you gotta have those, right? You can't have
Yeah,
them all. Um,
right.
if you look 10 years ahead from now and you need to take one big bet, what's the one that you're going to be taking?
Ooh, one big bet for the next 10 years. Honestly, I think the stablecoin stuff will really take off. It's, from and when I say stuff, I mean like the whole ecosystem. If I was to, I would honestly even consider launching a micro fund. If I was a new, let's say, investor to the space, I would do like a fund strategy that's just dedicated to the stablecoin ecosystem, the stablecoin infrastructure. That's companies that are related to stablecoins. That are companies that harmonize stablecoin stuff for non-crypto businesses. That's everything that touches that space. I would just do a $20 million, debut fund that's like stablecoin stuff only. I'd launch it in 2026, 2027, come bear market, and I would just focus on that entirely.
I think that sounds pretty cool because the market is just quickly expanding so much, also in the US. So it's a good idea.
Mm.
If we talk about being new in this market, in the current industry, what type of advice would you give someone that is starting?
From like, I guess from the perspective of an investor, you think, or more like a founder or retail or what, which
Just
category?
just being overly interested into blockchain as a whole, not really sure.
Mm.
Um, Probably going to be an investor, but would like to be working in the space. What type of advice
Right.
would you give someone?
Yeah, yeah. I think, when I don't recall when you've entered the space, I've been here since 2013, and I'm sure if you were there at those times, I'm sure you remember, it was like there was just so much information opacity. No one had any idea what was happening. Even now, there still is some, but at least there's some visibility. And I'd say now if I were entering the space, I would sit down for 60 days and I would just look at all these on-chain data analytics tools, and I would just try to figure out where funds are flowing. I just sit there and map out the industry. I'd be like, okay, where the fuck is money coming from? Who is spending it on what? Where is stuff going? Where's like usage? Where are volumes? Where are revenue pools? What kinds of business models are making money? I would sit there and do that for 60 days before I even touch a single crypto asset. And then I would use that mental model to then piece together a map of where I should deploy my capital. You know, where are the profitable opportunities? What are the risk adjusted return profiles of each of those? And I would just gradually get more and more inculcated until, you know, some like maybe 20, 30% of my net worth is sitting in this asset class, and then take it from there. But I wouldn't just jump in.
I think that's actually a good idea. On-chain activity was there, but you couldn't really analyze it during those periods. It was quite hard. I
Yeah.
started back in the end of 2016, and the way how I navigated through the cycle, through the markets, was actually going to events, offline events. And the first real steps that I took by the office that I went to, the Amsterdam Stock Exchange that I worked with, the partners that I got, was from those events that I went to, where everybody was still very chill, looking to do stuff with the Bitcoin or within the Ethereum ecosystem. I think these two combined, learning a lot about on-chain activity and going to events, is probably a very ideal concept of how you should be starting in this space, instead of going online and start looking at X or start looking at any platform out there, because there's just so much noise. Um, if we look ahead for the next 6 months, what are your goals when it comes to Maelstrom?
Yeah,
Aside,
so Maelstrom, when we started off, right, so goal number one, make money, right?
yeah,
But I think aside from our the strategies that we've talked about, right? The venture strategy, which we launched in day one, liquid strategy launched last year. We've also been trying to build out this buyout strategy, whereby we acquire companies in the space, and you know, companies without tokens, companies that are actually making money, EBITDA positive, acquire them, help mature these businesses, grow them, and sell them for a higher valuation in 3 to 5 years. That's a huge area of focus for me right now, and I'm trying to build out this team to do so. And we've hired somebody from the traditional private equity world, from SaaS PE, named Adam, to help create that. So I think that's a big area of focus for me, just kind of like build out the longer term strategy there, um, while obviously maintaining our investments on the venture and liquid side.
well, it sounds like an ultimate challenge when likely the volatility is going to go up to build another company next to it.
Right, for
A-
sure. Never a
Anyways,
dull day.
anyways, thank you for being on the show. Good luck with that, the build out with the buyout part of the company. Good luck in the coming 6 months and 12 months when the markets are going to be a little bit more volatile. Very insightful. And final question that I wanted to ask is, where can people find you or find Maelstrom if they want to be connected to the company?
Yeah, we're on Twitter, so you can find me at Akshat, which is my first name, AKSHAT_HK. And Maelstrom is everywhere.
Nice. Good. Thank you very much for being on the show, and would love to have you on the show in a year time to discuss what has happened since, and good luck with everything.
That'd be awesome. Thank you.
Thank you.